G'day guys, and welcome to another episode of the Aussie Dividend Machine. So, as you may have heard, Warren Buffett's bought, finally, in 2020. He's purchased some gas stocks in the US, or more accurately, he's actually bought a portion of a gas company, which includes pipelines which deliver gas all across the United States. So what does Buffett's purchase mean for everybody else in the world? Warren's really good at identifying opportunities in the market. He's taken advantage of really low gas prices, which I think could be a good opportunity for investors like you and me to also have a look at and potentially pick up some cheap stocks at the moment. So today I wanted to run through a comparison between the stock I've purchased the other day and also another major oil and gas producer listed on the Australian Stock Exchange. Okay guys, so now over to the computer, and on the Self-Wealth dashboard you can see my estimated earnings for the day. Coming over to the My Portfolio tab, if I zoom into the 1 month view, you can see how I'm tracking against the market. Not too many stocks in the portfolio at this stage, so we're pretty much flatlining. The share I wanted to talk to you about today is Beach Energy Limited. So made a purchase of Beach Energy at an average price of $1.4 per share, and I've purchased a total of $1,500 of shares. Just coming onto Beach's homepage, you can see here it gives you a brief summary of the business. So Beach Energy's an oil and natural gas exploration and production company. Beach Energy also does have some pipelines across the country. They operate a lot in the south of Australia, which is contrary to a lot of the big oil and gas producers in this country who mainly operate off the west coast of Western Australia. So the company I wanted to compare Beach Energy to today is Woodside Petroleum. I've just put up their annual report. I think there's a really interesting piece of this report. If I scroll down to the note by the chairman, there's a really interesting takeaway that I found after reading some of this report. You can see here they mention about renewables. You may think oil and gas companies, how sustainable is their growth in the current climate, considering this big shift to renewables that a lot of the world is leaning towards. This here reads, existing gas fields globally are declining at a rate of approximately 8% per annum without new capital investment. So that's sort of saying there's a net drop in the amount of gas that's being mined without any new capital investment. It also states renewables are growing and the growth must continue, but their exponential growth is not fast enough to satisfy rising global demand for energy. The chairman's highlighting that while renewables are up and coming, the current demand for energy is not met by those renewables despite their increasing growth. So this sort of highlights that yes, oil and gas is going to be relevant going into the future. So guys, here's a couple of slides I put together just comparing Beach and Woodside, and really goes over the 4 or 5 major points that made me purchase the Beach stock. So I'll get going through this. Number 1 is revenue. You can see Beach's revenue is increasing on a consistent basis, and in recent years is really looking at some pretty significant growth. Whereas compared to Woodside, their revenue's sort of all over the place. It's going up, it's going down, it doesn't really know what it's doing. That shows me that Beach has more of a consistent growth, and that's what I'm looking for when purchasing a share. Looking at the dividend, both companies have a pretty good, pretty consistent dividend payout. Woodside's dividend's a lot bigger, however, in terms of percentage that is. However, Beach is a growing dividend and they are reinvesting a lot of the money back into the business. So I'd expect their pretty low dividend yield at the moment to definitely grow in the coming years. So not a big cash cow at the moment, but I think it definitely could become more and more lucrative as the years go by. Looking at the growth of the two companies, you can see over the last 5 years, Woodside has been fairly flat, a bit up and down, probably trending upwards a little bit, whereas Beach has had a lot stronger growth. You can see the COVID-19 crash earlier this year The stock hasn't recovered that well. Considering global gas prices are still low, I wouldn't expect that to pick up until gas prices do rise. Woodside's in a similar position. Both stocks are pretty well priced at the moment, but yeah, for these reasons, Beach has been my pick. Item number 4, the payout ratio. So this one's really interesting. The payout ratio tells you how much of the company's profits they're actually giving back to shareholders. In Woodside's case, they're actually paying out 237% of their profits. You might ask, how is that possible? Well, it's not. It's not sustainable. It means they're trying to find money from other places of the business, potentially debt, potentially other assets, to pay out shareholders and keep their dividend high. So they do have a high dividend, but they're not really paying for it with their profits, which is not a healthy sign. Beach, on the other hand, has a low dividend payout. However, their payout ratio is really low. They've got a lot of headroom to increase their dividend, which is really promising, especially if you're looking for an increasing dividend. They've got plenty of room to do that over the next few years. Last item here is their balance sheet. Beach has a really strong balance sheet. They've got a low amount of debt. They've got a high shareholder equity. There's a couple of points there you can go over, but Woodside in comparison, a lot of debt, and as you can see, they're paying out to shareholders more than they can afford. So for these reasons, Beach has been my pick for a good oil and gas stock in this current downturn. So hope this was useful, and I hope this gives you a few points to focus on maybe some shares that you're considering. So guys, thanks for tuning in to today's episode. I hope you learned something, and I hope maybe some of those stocks mentioned were of interest to you. Stay tuned for more coming up in the next few days. Cheers.